Good afternoon, hello, and welcome to FinTech Diary. Every week, we speak to an industry expert who's part of the FinTech revolution. In the world of FinTechs, which is based on constant evolution and innovation, we question change makers on how they plan ahead and read the future developments of the FinTechs. In every chapter of the FinTech Diary, we get the breadth and depth of every segment related to FinTech. Ladies and gentlemen, my name is Amol Dete, and my guest for this chapter today is Nitya Sharma, co-founder and CEO, Simple. Simple is SIMPL. Nitya, glad to have you.
Amol, nice to speak to you here, and thanks for having me.
Great, Nitya. Thank you so much for being part of FinTech Diary. And let me, shoot many questions to you. But before that, obviously, we'll try to understand how the FinTech innovation is. What are your views? What are your strategies? But before that, introduce us to Simple. I understand you started maybe 4 5 years back. How has been your journey? What are the segments that you operate in? And how has been actually your shaping and reshaping your business model, Nitya?
Yeah. So Anmol, before starting to explain what Simple is, just want to give you a backdrop here. What we saw was that in India, very few people have a credit card. We have the fastest growing e-commerce market in the world, and 70% people still use cash on delivery to pay for what they buy online. Despite the fact that everybody has a debit card, almost 900 million people have a debit card, and they all have a bank account and also have UPI. So everybody has a way to pay online, but 70% people choose to use cash on delivery. And the biggest drivers of cash on delivery is trust. So at Simple, we are solving that problem. So what Simple is a way to buy things online with a one click so that it's easy for consumers to use. So there is no numbers, there's no passwords, there'll never be somebody who will steal your password and so on. And most importantly, what Simple does is all these purchases you do across the network of merchants we work with, Simple gives you one bill every 15 days that you pay off. So the easiest way to explain Simple is it's the khata or a tab or an account that we all have used are used to run with our local kirana store. We have just transformed this khata on the internet so that consumers can buy easily, intuitively, and merchants are able to build a relationship of trust with their customer. So that's what Simple is. As I said, we are focused on online commerce. So we're focused on the internet. And within online commerce, we are very focused on use cases and transactions that consumers do very frequently in a month. So that's what we focus on. So for example, we focus and do a lot of work on food delivery, groceries, movie tickets, transportation, travel, fashion, lifestyle. So that's what Simple is. Simple is about, making all the things that you consume on the internet in a month frequently just frictionless for you to buy.
Okay, noted your points, Nitya. I think a lot of fintechs are operating in the same space, maybe some plus minus, some different innovations here and there, and different players with digital innovation here. Uh, what is your learning specifically about the business model that you have developed till now? Because I think it's relatively maybe 3 to 4 years for you. You have understood the market well. So how has been the market changing for you? Because the payment rally has completely shifted now, and it maybe only 3 to 4 large players are actually kind of dominating the fintech payment space, and most of the fintech specifically operating in payment space now shifted to different profiles, maybe wealth tech, insurtech, or the credit. So how has the business model changing for the fintechs like you?
Yeah, so Amol, for us, we have not really changed our business model since we started, and we've been in the markets for about 5 years. And the reason is very simple. The problem that we are solving is still not solved by some of the large payment companies that you mentioned. So let's take the examples. We talk about large companies in payments. So that's obviously Amazon and PhonePe and Paytm and Google Pay and Facebook and so on. And of course, they are there. But again, despite the fact that they are there and pretty much everybody can use them, 70% people still use cash to buy, right? Despite the fact that people give cashbacks and so many other incentives. So there are two problems that are still there. One is on the merchant side. The merchant side problem is that they want to partner with someone who they can very confidently and safely partner so that they can offer their customers the experience that they want to offer. What that means is that partner needs to be neutral to them. So when you think about Amazon Pay is obviously part of Amazon, which is a very large e-commerce company, and all other e-commerce companies, whether it is big companies or small companies, in the end up competing with Amazon, right? And or Amazon competes with them, and therefore Amazon Pay is not a neutral like entity. Same is the case with most other large companies you mentioned. What Simple's mission is to empower any merchant, small or big, to be consumer centric. Right? So we take a very merchant first approach to payments and problem solving. So that's sort of like a very important differentiator. The second and equally important is that when you think about payments and the role of a payment product in the journey of commerce, traditionally it is thought of as something that moves money. Right? As far as we are concerned, we think of that as a solved problem. Moving money is no longer a problem needed to be solved. Money can be moved in real time, 24/7 with some card or with UPI, etc. The problem is, how do you make sure that when a consumer is moving their money online, buying something on the internet where they have still not received it, and so many things can happen in that journey between when you press the button to buy and then you liking it and you wanting to return it. There is a lot of elements of the post-purchase experience
Right.
that are still unaddressed by payment companies. So at Simple, we are focusing not only on a great user experience at checkout, but also all the elements in the post-purchase journey that builds trust. And that is, again, very unique to, I guess, the offer, the proposition that Simple makes to both merchants and consumers.
Okay, thanks for giving me that perspective on the merchants, and I can see fintechs actually looking at merchants as a very unique proposition. Like you said, 70% people go for cash on delivery. In fact, I was talking to some fintech player who had created a good database on the payment. He said that even no matter how aggressive we are going for digital payments, cash to digital ratio specifically compared to GDP is very less. Still in India. I mean, obviously, we have different modes of payment which are doing, but how lucrative this merchant payment business model is for you, Nitya? Because I do understand that on the customer side, nobody can make money, or everyone is unable to make money because of different reasons there, right? But on the merchant side, how lucrative that business model is?
Yeah. So Amol, the way we think about it is, first of all, right, the stated goal of the company, the vision is, the question we ask is, what is the next Visa? Right? So what we are actually not trying to build is a payment product. We are building a new network, like a Visa would be, right? Now, the way we are different from Visa or MasterCard, etc., is that most payment networks are a network of banks. So their main customer is a bank. We are a network of merchants, right? And sort of like that's sort of like our whole orientation is. So just like a payment network, we're actually a software company. So we are not a payment product. We are really a software company that merchants work with and then use us to sort of like provide this consumer experience to their customers on checkout. Now, obviously we are in a very hyper growth phase and so on, but margins in any software business is very high, fairly high, which is how it is very different from. So we are a little bit more like a SaaS network than a consumer payment company. So yeah, I mean, but yeah, long way to go. There is a lot to do here. We are currently building. We are currently have a very basic product. Basically, as I said, this product allows you to buy with one click. Don't worry about anything. You don't have to pay. You can do these clicks over a period of 15 days and you get one bill and you pay it off. So it's a very simple product. What we are building now on top of this thing is other interesting things that again solves both merchants and consumer problems are like, for example, would be loyalty rewards. Merchants being able to give loyalty points or rewards to their customer so that the loyalty and relationship between the two of them is sort of built, right? So yeah, I mean, we see this as ability to monetize in different ways, be really a network, not only that is a payment network, but also a network that helps merchants with insights, better decisions on who to give loyalty points and how much, etc. And we think that in the long term, there is multiple ways to monetize this network.
Okay. Noted your points, Nitya. Let me shift a little focus from payment to credit. I think you are also have entered into a segment called BNPL, right? Buy now, pay later. How has that shaping up? Because now I can see a lot of credit fintechs operating on the lending side are going really high on the BNPL side. How has it been for you?
Yeah. So as I said, right, people think of us as BNPL, as you said, and there is nothing wrong with that. But the reality of the company is, or the product is, it's more like a buy and pay once company as opposed to buy now, pay later company. Very much like a khata, right? There is an element of credit, informal credit in a khata, but the use case is not credit. So you don't take a khata from your kirana store because you need money or they are trying to lend you money, right? So credit is really a sort of a tool or a product feature that allows the merchant and consumers to have a frictionless sort of experience, right? So yeah, to that extent, we are BNPL. But again, the use case of our product is very much around convenience, trust, ease, simplicity, as opposed to affordability. So yeah, I mean, and the use cases are, you know, um, taking that into account. So people use Simple to buy food, grocery, movie tickets, transportation, t-shirts, sneakers, those type of things. And almost no one uses us to buy like a washing machine or a computer or a phone, right? Over long periods of time, we'll probably do those things. But today, we are very much focused on these frequent purchases people do in a month. And our job is to focus on checkout experience so that consumers get a good experience. And for the retailer, two things happen. One, it increases conversions. We increase conversion by almost more than 50%. So which means somebody comes to buy, do they actually buy or not, right? Increase conversions and equally importantly, reduce the percentage of cash on delivery, which is again very important because cash on delivery can be incredibly expensive with fraud, returns, pilferage, theft. Anything can happen when you've not even received the payments, right? So we solve that problem for retailers.
So, but aren't you going slow in terms of then buy now pay later side, or you have particularly chosen that part that I will be limited to offer credit to only these particular segments and not to washing machines or maybe other heavy capital goods, but a product which are very lesser in size or something like that. Have you purposely taken that call? If yes, could you just demystify for us in terms of why?
Yeah, we've purposely taken that call because we think of ourselves as a checkout company as opposed to a lending company or financial services company, right? So we have taken that call purposely. Now, there are two important elements to probably appreciate here. Just a statistic, and this is a rough statistic, which I um, sort of read somewhere in a research report. 70% of all transactions that are made in India, online or offline, are under 500 rupee transactions, right? This is a massive market, right? Now imagine for yourself, right? I mean, if you look at your bill of UPI, credit card, or even cash, these are transactions we do, right? Food and grocery and samosa and tea. Those are things, right? We don't buy our washing machine that frequently, right? So therefore, by focusing on these transactions, we are actually focusing on the biggest market. So that's number one. Second, our long-term vision and long-term strategy is not to be a payment product or a fintech company, etc. We are building a payment network. Now, networks inherently are valuable when there is a lot of engagement. A lot of people do multiple things. Does not matter how much or how many or how big, but interaction is important, right? And obviously, a use case like a washing machine, the interaction is obviously limited by the number of times somebody buy a washing machine versus food or transportation or travel and so on, right? So that's our strategic reason why we are focused there. We want to be in consumers' life multiple times a month. We want to focus on user experience. We want to focus on merchants conversions. we want to solve the problem of cash on delivery. Now, Anmol, the reality is, these are very hard problems to solve, right? I mean, like we're literally scratching the surface right now. So yeah, I mean, like one of our stated principle in our company is focus. I think sometimes focus is very underappreciated in startups. To me, that's the biggest weapon a startup has against so many other things that are going on in the world. So we are very focused on this use case. We have done a lot of work. We have scaled a lot, but I think there is just a lot of work to do here. So we're focused on this space for the reasons I just told you.
Okay, noted your points. I think that gives me a different learning for me as well. That 70% transactions are below 500, and if you want to tap that, I think it's a different what you can say segment altogether. Uh, but are you making money in this segment? Because I can see the volume will be really high, no doubt about it. But the margins or the transaction fees you must be charging, or maybe it's happening there will be minimal, right? So is it actually helping you in terms of making some money out of it?
Yeah, I mean, so obviously the take rate in a business like this in the beginning is not very high. So we make about 2% per transaction. But it's a very high, fairly high margin business from that 2%, which means we have positive contribution margins. We make money on every single transaction we make. We have de minimis cost of customer acquisition because our network gives us customer because they are already buying from all these merchants. So yeah, it's a very scalable business model. But you're right. This is a very horizontal scale business for us to become big, which we intend to. We need to be broad and very big, and that's why we are going after the 70% market naturally. Um, so today we make about 2%, a little bit more sometimes. Yeah, I mean, in the long term, as we have more merchants, more consumers, more data, we are building tools, technologies, and products for merchants to as I said, give loyalty rewards to their customer, right? So now that is moving to a little bit of an not exactly, but a marketing business model, right? Consumers are being sought after by merchants and give loyalty points. So we will have different ways to monetize. Our goal right now is running a strategy to build the fastest and the biggest network fast. That's our main goal. Um, while doing so, make sure our unit economics are never negative, so that we can be capital efficient. And at a scale, which I think we'll get to probably in the next 12 to 18 months, monetize it a lot more aggressively through, again, value-added features for both merchants and consumers like loyalty rewards, and we have a lot of other such things in time.
Okay. So, Vidya, tell me something about the obstacles, because now there are two, three things that I see here. Obviously, every fintech is trying to add different layers, different business models here, and trying to monetize, what they're actually doing with merchants and different, credit things. What are the major obstacles do you see right now? Because at one side, most of the fintechs are kind of doing the same thing, so competition is very high. That is one. Second is e-commerce companies have also gotten into the fintech business, and they have created their own platforms, and helping and also collaborated and partnered with banks, and what you can say, making this transaction seamless and directly giving the loyalty points which you mentioned to the customers. So, what are the major obstacles do you see? Do you see what I discussed is one major obstacle? If yes, what are the other obstacles?
Yeah. So some of those are obstacles, obviously. But the way we think about it is the second point you made, right? When an e-commerce company themselves are building something like that could look like Simple, the reason it is different is, again, like I'll just give you an analogy of Visa, right? Every bank on the planet works with Visa or MasterCard or some network like that to be able to give credit cards to consumers, right? Ideally, every bank would want to just give their card to people and they can figure out how to use it. But obviously that doesn't work. And the reason it doesn't work is because consumer wants just one thing to use across the merchants as opposed to one merchant, right? Or one bank or something. Which is why a network is very important, especially in payments, right? So if you think about XYZ merchant pay later, right? Or payments or whatever, one of the things you'll always notice is they find it very hard to get acceptance from other merchants, at least deep acceptance. And the reason is very simple. They're competing with each other naturally. And so therefore, collaborating with each other, your competition becomes a hard problem to solve. Which is why you see networks being neutral to each other or the market, right? So we play this role of a neutral orchestrator network, which works with all merchants, big or small, equally, right? And there is never a threat that we will compete with them or do a business that might, be competitive, or the customer take away the customer or data and so on. So that's number one. That's why, yes, there is noise. There is so many things happening. Obviously, payments is by far the largest industry in the world. So naturally, the biggest tech companies would want to do it. But we believe very strongly the biggest tech companies are not positioned to be the next network, purely because networks are supposed to cut through everyone, as opposed to be silos, right? So I think we are very well positioned, but there is definitely competitive element. I would not deny that. The way we think about our risk and how do you want to focus is really honestly, again, right? We all talk about so much innovation. There is so much happened in India in FinTech and so many things. But Amol, the reality is, we started Simpl 5 years ago, and that is pre-demonetization, right? The demonetization had not even happened.
Yes, yes.
70% of e-commerce was on cash on delivery.
Hmm.
Now 5 years have passed, and the world has changed almost, right? I mean, we have had demonetization. We have pretty much everybody in India has a bank account. They all have Aadhaar. They all have UPI. Everything is there. We can even get a car sent to our house with one click, right?
Yes, yes.
But 70% people still use cash,
Yeah.
right? So there is still an unsolved problem, which I don't think most people are attacking. By the way, it's a very hard problem and probably the hardest problem. And that's what we are focused in solving. And that is that of trust and convenience on checkout, right? So yeah, I mean, like the way we think about it is, of course, there are a lot of
Sure.
things happening.
But
We just
Nitya,
want to focus on, yeah.
no, sorry to interrupt. The cash point we discussed almost once or twice. So, is there any reason? I mean, have you done any research in terms of why people are still want to go for a cash for even small payments? Then, is there any background to it? I mean, I can understand the senior citizen may be very comfortable with cash rather than scrolling down on the phone and opening an app and remembering a password. But is there any logic that you have seen why people still going for a cash?
Yes, Amol, there is a very strong logic. And before the logic, let me give you a statistic, because we all have a
Sure.
version like senior citizens, old people don't know technology and all of that. That's not the reason. So statistics is this. Um, in a D2C, like if you have a D2C platform, direct to customer e-commerce, right? So you're selling some cool stuff, right? Typically, your customer is a fairly evolved internet customer who is very native to internet, native to e-commerce. They have a decent spending power, and they certainly know how to use the mobile, right? So they're young people buying t-shirts, cosmetics, shoes, fancy food online, right? Yoga gear, all these things that are happening today, right? So naturally, this person is 22 or whatever, 18 to 35 year old, young, lives in Bangalore or whatever. 85% of those customers, when offered cash on delivery, choose cash on delivery, right? So naturally, that doesn't mean that these are people who don't know how to use their UPI or phone or something, right? The reason is one, trust, right? So if I were to ask you a question at a fundamental level, right? If you think about your offline transaction, you go to a store, right? And a physical store in your neighborhood, how do you transact? Well, the transaction system is you go, you look at your shirt, you wear it, you like it, you go to the cashier and you pay for it, and you get the shirt, you give the money, and the transaction is done, right? And it's a very simple way to
Absolutely.
think about trust, right? There is no element of trust. I give you money, you give me shirt, we walk away. Online is very different, right? When I'm giving you money first, so imagine this, right? We assumed when internet started, and we believe this is the original sin of e-commerce. Uh, it is counterintuitive for a consumer to pay first and get delivered later, right?
Right.
And that is the problem, right? Consumers are like, of course, with a lot of work and a lot of technology and a lot of money and all of that, customer support, you can maybe change the behavior, and obviously that's happening. But the right way is to build trust in the journey of post-purchase experience, right? So trust is the biggest driver, by far the biggest driver. Of course, there are some people who may still not know how to use UPI or card or something, but the biggest driver is trust. And the only way to solve is not to build more payment instruments or this or that, or some marketing
Right.
around it, but to build trust baked into the payment network itself. And that's something what we are doing.
Okay, noted your points. I think thanks. That was really meaningful because I was keen on understanding that. Because sometimes on Instagram and Facebook and Twitter and LinkedIn, when you keep seeing these different e-commerce companies which maybe existed just a month back and giving you a lot of cashbacks and discounts, people are a little confused or worried whether the product will be actually delivered at the door or not, right? So that's also one of the challenge maybe fintechs like you will have to resolve. But you spoke about how you are heading from different layers to payment merchants and credit and going very reserved way specifically on the credit side. Tell me some what you can just give me some statistics about how many customers are you adding every month specifically on payment or maybe the credit side, so just we'll get an idea. And what kind of funds have you raised till now?
Yeah. So, we are adding right now a little north of 200,000, slightly more than that, new users every day, every sorry month. So that's sort of our growth rate.
Sure.
Over the last 18 months, we have grown 10x, 10 times. Both on merchants, we think of ourselves as a two-sided network, right? So we have both merchants and consumers. It's just not consumers. So on both sides, we need to grow consistently and quickly. Um, on the funds, we are from the type of business we are in, as we just discussed, we are a very capital efficient business to start with. But obviously, it's a very competitive market, and eventually, the potential is to build a next massive internet platform like a Visa, not only in India but globally. So yeah, we are pretty aggressive about fundraising to make sure we are growing fast. So far in the sort of life of our company, we have raised about $80 million, 85 roughly. So that's a fundraise we've done so far.
What next? Are you still in the pipeline? Is there any other fundraise in the pipeline?
Amol, right now we are very much we recently completed a fundraise about 4 or 5 months back, late last year, um, and that gives us a lot of runway, more than 24 months runway, and so on. So currently we are very much focused on just building the business, building the intrinsic value of the business, solving some of the tough problems here. That's what tough problems are around solving for fraud, solving for building better and better user experiences for both merchants and consumers, very, very quickly testing them, iterating them, and putting them in the market. So yeah, we're just focused on that. We are expanding our team. Very proud to say that I believe we have some of the smartest people in the country and perhaps the world working at Simpl solving. And the most important thing is, of course, there are a lot of smart people in so many other companies. We are all solving just one problem, right? And that's where I mentioned, right? You know, if you look at a lot of companies that may look like us a little bit, right? Even on the surface, you'll see they are doing multiple things, right? Especially around lending. They'll give you a personal loan and then this loan and wedding loan and maybe a credit card and so on. And that's fine. And that's a different approach. We have just focused on one thing: checkout. Checkout on e-commerce and mobile commerce, right? And the entire team of engineers, data scientists, designers, product managers, customer support professionals. We just all focus on solving one problem, and yeah, I mean, like, just our focus is just keep on solving that problem, make sure we compound our value to our merchants and consumers, and just keep on doing that. As we do that, we'll probably need money at some point, which we'll raise when the time is right.
Sure, Nitya. Let me take one or two last question with you. Now fintechs, are not as, I mean, obviously it's a startup phase and everything, but again, they are not a typical, a very new, we could have thought of because it's been, at least there are a lot of fintechs which are 7 to 8 years old now. There are fintechs which actually got listed into the market, in last couple of months, and there are many fintechs those who are in the unicorn bracket, are actually thinking of going and hitting the secondary market very soon. They have their IPO plans and all. By any chance, Have you seen a difference in the market now, specifically in the fintech market, after the listing of top fintechs?
So Amol, obviously, we are all seeing what's been happening in the market in the last, let's say, quarter, and more so in the last month. And I would say it is more broad-based in technology as opposed to fintech or any particular category. And obviously, that is happening not only in India but across the world. And what is happening today primarily is driven by one macro factor, which is interest rates, inflation, and therefore interest rates. So when interest rate shocks, asset prices come down, and they often come down very, very quickly. So basically, I would say I would not pick a category here like fintech. And yeah, I mean, I don't know the exact numbers, but all technology sectors, from a public market point of view, which are the only markets we can observe on a daily basis, they're down, right? Anywhere from 50 to 80%, primarily because of interest rates. Now, fundamentally, I don't think, and I definitely believe that the fundamental opportunity is not less anymore, right? It's not like consumers would need less valuable services or blockchain or Web3 or any sort of technologies that entrepreneurs are working on. If anything, one thing is for sure, there'll be more and more technology, consumers will adopt it, it'll change lives, it'll make life better and more accessible, financial services more accessible, and so on. But interest rates have an effect on asset prices that we are all observing. And sometimes what happens because of that is, there is chaos in the market, right? Which is what we are seeing. Fundraisers become very hard. And yeah, I mean, I think overall it's a good thing. We believe very strongly, and this is how we have run Simpl since we started. Constraints create better innovation and therefore better businesses, right? So this is actually a great market to not be distracted. I think the problem in the last few years of market was everybody is doing everything, and next shiny thing, so everybody wants to do, which is sort of normal in a frothy market. But now, naturally, everybody has to focus a little bit more, and really think about business itself, which is always a good thing, almost always a good thing. So yeah, I mean, it's a cycle that we are going through in the world, in capital markets, including technology, and definitely in fintech.
So, Nitya, where are we heading? I'm sure you must be observing other companies, the whole fintech rally in the India now. Where are we heading? Where are the fintechs heading right now, according to you? And what is it that fintechs need today to achieve the next level of growth? Or what is it that the fintechs need to scale up and achieve? What you can say, reach to a next level.
Yeah, Amol. So I think when you say what happens next, look, I'm not an economist, and I am just focused on our business, so it's very hard to give a general view. And in any case, it's very hard to give what will happen in 3 months or 1 year or even 2 years. But I'm sure of about one thing. If you take a 10-year horizon, which I think is the only horizon to take, if you're truly wanting to build valuable product services, fintech as a category, it might be called something different because it will not be new anymore, and people will try to find a different word. But fintech as a category will be a 10 to 20x, maybe even bigger than what it is today, purely because there is just so much innovation still left in financial services, right? Um, and that innovation is not just around banking, right? Because at a fundamental level, at least in India, let's say, banking is solved. Everybody has a bank account. They all have UPI or some sort, right? What is still to be solved is, which is true for all socioeconomic economic strata, is experiences, personalization, right? I believe very strongly that we are already in this world of self-driving cars, right? I mean, like technically, the car can drive itself. Can your money can drive itself, right? Are we still in the world of self-driving money, right? So I get my money in my bank account, and then what happens? I have no idea, right? It's sitting there, and then I have to figure out which to invest, how to spend, how to borrow, how to lend, right? And yeah, I mean, like this, if you kind of like extrapolate out what can happen, it is a very exciting future. But exciting future happen in 10-year horizons and not quarters. So yeah, I mean, we are very excited about it as long as you take the long-term horizon. Short term, we should be expecting a lot of shocks, ups and downs, clearly. And I think companies, management teams, startups have to be very focused on
Right.
how to invest the resources, how to focus on the business, how to create valuable products and services that should create value to their markets.
Hmm. Meaningful one, Nitya. I think that's a very interesting line that the cars are actually going automated and driverless cars are going to come very soon. It has in fact come in many parts of the geography, and I think if money can drive on its own, I think it's a interesting statement, Nitya. Let's hope that it should that. I mean, what should happen is it should happen in the right direction. It should drive in the right direction, and let's hope for that. Meaningful points, and thank you so much, Nitya, for taking out time and sharing your views at FinTech Diary.
Amol, thanks for having me. This was a great chat.
Sure. So, ladies and gentlemen, that's a wrap from our side. And click on the FinTech Diary. Tap to view our previous episodes. If you like it, please don't forget to share it on social media. Also, please ensure that you are subscribed to our daily newsletter, which is absolutely for free. Thank you so much for watching FinTech Diary on etbfsi.com. Thank you so much.